Truth is, I thought it mattered. I thought that
money
mattered. But does it bollocks? Not compared to how people matter.
Welcome, Mention, and other fine folks to the Someday Dispatch of the Black Letter, where we contemplate thoughts worth thinking. This is your spectator of the spectacle, coming to you live from deep inside the Upside Down. And today, being deep inside the Upside Down, we're going to focus primarily on cryptocurrencies, and we'll take a look at different prices of things, where the market's at in both precious metals and in crypto coins. And we'll also take a look at the apple of my eye, Apple, the company, the computing company. So let's get started. First up is the coin market cap. As we can see, let's take a look at the first 10 or so. The largest cap, as you can see, they're all ranked by market cap. Bitcoin, of course, Ethereum, number 2, Tether, number 3, XRP, number 4, Bitcoin Cash, Bitcoin SV, Litecoin, Binance Coin, EOS, Cardano, and Tezos. I want to go down and see Stellar as well. I have Stellar. I have a little bit of Stellar, so that's lost 1%, which is great. Means I can pick up a little bit more when I have some money. Most of these in the top 10 have lost a little bit of money. Bitcoin Cash has gained, as has XRP, but not by much. Bitcoin a little bit, and Ether up a little bit too. So things are looking fairly steady. There's going to be a lot of people talking about all sorts of fancy numbers. The witch doctors are going to be out in full force, throwing bones and reading tea leaves. So just ignore all that noise, but it's fun to look at. It's fun to imagine. It's fun to take a hit on the opium pipe now and then. But we shouldn't get carried away and untethered from reality as the stock market has. Okay, let's take a look at the precious metals. All right, so here we can see the spot price over the last, about 48 hours. Gold has gone up a little bit, and silver is sort of holding fairly steady. Let's take a look here, see if we can find further information about this. Here we are. This is the last 3 months. Yeah, it's about holding steady. It's about even, which is not bad. That means that we can buy more gold and silver for not too much more money. As mentioned, I think silver is perhaps the better approach right now if you're interested in precious metals. At least that's what I'm doing. A, I can't afford gold, and B, the gold-silver ratio, as I've mentioned before, is at almost an all-time high, which means that the silver is generally undervalued compared to gold. Here we can see it's also reasonably flat, but a slight uptick from about 3 months ago compared to gold. We'll take a quick look at the ratio here, as you can see what I'm talking about. So the ratio, it's coming down. It was, I think, at the all-time high back here in March 18th at about 122. Now it's at 95. But if you go at all time, you can see that the ratio is still exceptionally high, which usually means that gold is overvalued compared to silver. Not that gold won't go up, but that silver has potentially a greater runway ahead of it. All right, so that's fun and interesting. Let's take a look at some of the news here. So see, these are some of the thoughts I've been contemplating. Here's the Ethereum topped Bitcoin in network daily fees over weekend. I'm not sure if this means much, but it's quite interesting. Daily Ethereum network fees surpassed those of the Bitcoin network for 2 consecutive days on June 6th and 7th. Data obtained by on-chain market and analysis firm Glassnode shows. Fees spent on the Ethereum network added up to 498,000 compared to Bitcoin's 308,000. Ethereum's mempool is currently clogged, and that could be one of the reasons why we're seeing these increased fees. As the mempool gets clogged, that means basically the mempool is where transactions go that haven't been validated, and they go there to wait until they get put into the next block to get validated and added to the blockchain. So it sort of causes more congestion, and so the fees will increase in order to get those transactions cleared. Anyway, I think that's primarily the reason. But what I thought was interesting is these numbers. I mean, $500,000 and almost $250,000. These are small. This is a pittance compared to the big financial currency transactions happening all over the world. So, Bitcoin, Ethereum, other good cryptos, I think, have lots of runway ahead of them. This is just the early innings, folks, I think, for the real bull market to come in the next perhaps year and a half to 3 years, who knows. But I think we've got lots of runway. I think there's lots of opportunities to buy a little bit of cryptocurrency if that's what you want to do. I'm certainly not worried about missing out. I don't think much is going to happen before the fall, around the election time and into next year. So we got a long runway. Bitcoin price 75,000 within weeks. Recovery mimics 2013 700% bull run. Bitcoin US dollar is perfectly repeating its run up to all-time highs in 2013. Price analysis reveals despite mixed feelings about 2020's outlook. BTC is looking like it will hit 75k, and that could happen within weeks, one analyst has found. The 2020 hashtag Bitcoin recovery has tracked the 2013 recovery almost perfectly, he summarized. So let's see if we can open this up, and you can see here the nice bright blue is the 2020, and it's following a little bit the dotted dark blue line, as you can see here, especially lately. And so he's thinking it's going to go up like that. And I'm not certain. This is analysts, witch doctors, throwing bones around and trying to read tea leaves. So that's interesting. They say that history doesn't repeat, but it can certainly rhyme. And so we'll see what happens. This will take us into, I guess, middle of June, apparently. So we'll see what happens. Good news, though. There's lots of good news for Bitcoin, of course. And you always have to be careful. People speak in their book, of course, right? But I think cryptocurrencies are only in their early stages. They're going to be ramping up much higher. Robinhood users steal from the rich to fill their Bitcoin bags. Max Kaiser, many of you will know. I don't know him all that well, but I do understand he's a Bitcoin maximalist. I think he believes only in Bitcoin, and Bitcoin, the one coin to rule them all. And I don't think that that's how the market is going to eventually develop. I think there'll probably be a handful of coins, maybe a top dozen or so, that will work out well, and many of the others will probably go to zero, become nothing burgers. But I think Bitcoin will certainly be at the top of that heap, along with several others. So difficulty is trying to choose which ones will probably have longevity. That's why I try to keep my interest into those, then let's say the top 15, top 20 or so, just to make sure that I'm not digging into the discounted bin, if you will. Kaiser claimed that users of the popular stock and cryptocurrency trading app Robinhood had stolen Buffett's money by capitalizing on his recent losses in the airline sector. He further suggested that the profits made on Buffett's mistimed stock sales were being invested in Bitcoin. Apparently, he's had an issue with Buffett for a long time, and I'm not quite sure. Anyway, he went on to suggest that the users were picking over Warren Buffett's career corpse, booking huge profits on his mistimed stock sales, and then rolling that money into Bitcoin. This is interesting. Folks have big egos, some of them, thinking that they know better than the oracle from Omaha. Now, it certainly does look like Warren Buffett has lost touch with reality, and people are calling him old and he's out of touch, etc., etc. But I wouldn't discount the man yet. I think there's a reason he's been in the game for 50, 60 years, and there's a reason he's one of the richest men in the world. I think he's biding his time. Stock markets are incredibly expensive, and I think folks like Max Kaiser and others who are discounting Buffett will, in the next year or so, be eating their words. That's for sure. Just my opinion, but you guys know I think the stock market is just outrageously overpriced at the moment. New report sees blockchain as possible cure for labor market woes. So here's an interesting article about some of the potential applications down the road for what blockchain and other technologies based on the blockchain can accomplish. I think blockchain especially will become a huge network, perhaps as big as the internet, if not bigger, over time, and help in all sorts of areas that we can probably only imagine about right now. But this is an interesting idea. So as of December 2019, data from the Federal Reserve indicated that 4 in 10 recent college graduates were underemployed. And that was in 2019, when everything was apparently at the best it's ever been, right? The economy was, had not been better than ever. Unemployment was at its lowest rate. So obviously, I think we've been building a house of cards or a house on sticks, and the storm's coming in. So you can imagine how much worse this is right now. Maybe it's 5 or 6 out of 10 are underemployed or unemployed. Blockchain technology in particular, they wrote, holds the promise of creating more efficient, durable connections between education and work. It would also allow you to have greater control over your credentials and who gets to see them, etc., etc. So how can blockchain technology help? Well, here they talk about some of the ways. Combining self-sovereign identity-related standards with blockchain-based CVs, which are curriculum vitae or resume. And portfolios is one way of providing various stakeholders, for example, college registrars, hiring managers, students, and workers with a reliable and real-time record of individuals' knowledge and skills. The report's authors identify 3 major themes from their research that reflect the opportunities they see in using DLT to advance social equity. And DLT is a digital ledger technology, so basically blockchain technologies. These are personal data agency, lifelong learning, and the power of connected ecosystems. And that's really where I think blockchain is going to excel, is in these interconnected ecosystems, creating more privacy, more trustfulness, and security as well. According to the report, there are 71 efforts internationally that are currently looking into using blockchain technologies in education, many of which remain at the proof of concept or pilot stages of testing. Again, folks, this is the early days. We're the early adopter phase, I think, even in blockchain and cryptocurrency technology. So, there's no need to go rush out. I'm just putting a little bit of money in sort of on a weekly basis or bi-weekly basis, as I still can scrape some savings together, 20, 30, 50 bucks, whatever I can manage, and buying sort of dollar cost averaging for the long run. I'm sort of a hodler or holder, that's for sure. Bitcoin could hit 300,000 in 5 years, even without institutional adoption. Now, crypto pioneer Adam Back has predicted Bitcoin will soar to 300,000 per Bitcoin within the next 5 years, even without Wall Street's highly anticipated institutional support. I have a tendency to think it'll happen before that, because if we look at the stock to flow model, which we'll take a look at again, you'll notice that by the time the next halving comes around, which is in about 4 years' time, somewhere in 2024, I believe, we should hit the all-time high, which will be around, I think, $100,000 per Bitcoin, in which case, could obviously exceed that. Sometimes a bull run will oftentimes well exceed what it should be before it sort of comes back down again. So 300,000, I think, is fairly reasonable. He goes on to say, it is causing people to think about the value of money and looking for ways to preserve money, Beck said, adding it's a difficult environment to get any yield. And it is. I mean, the dividend yield of the S&P, I think, is at pretty much historical lows. I mean, any way you look at the S&P, it's overvalued. So, and bonds, of course, are practically offering nothing. So where else can you go? And so I'm looking at cryptocurrencies and precious metals, but I think cryptocurrencies, in my opinion, have a much greater runway, much greater opportunity for minting millionaires. I think there's a potential, arguably, if you get the right cryptocurrencies, that if you put in, say, a few thousand or maybe up to 10,000 over the next year or so, or a few years, that you could end up being a millionaire in a decade, I think. But who knows? I mean, this is all speculation and hopium. Earlier this year, Beck said hyper-Bitcoinization and modern monetary theory rationale for high inflation could, in theory, mean Bitcoin is one day worth 10 million, and that would certainly be the case. And if that's the case, then I think arguably the US dollar has become practically worth nothing. Beck's latest Bitcoin price prediction comes as Donald Trump's administration weighs another massive round of stimulus measures, potentially adding a further $1 trillion. Already this year, the US has signed off on $3.5 trillion in relief measures. So, we keep printing, the Fed goes brr, blah, blah, blah. You know how it's going. Stocks have not been this expensive in 19 years. What to watch now? So folks are starting to figure out that this is indeed the case. And they go on to talk about it here. The index trades at more than 22 times forward earnings. And that, my friends, is going to start going parabolic. 22 times forward earnings is optimistic. When we start to really see where companies are at and what their earnings are at, that number, the price of the S&P, is going to, the PE, I should say, is going to escalate, because the price is high and the earnings is going to be much lower than they currently think it is. There's no question that earnings drive stocks, and I think that is going to continue to be the case. Here you can see where we are. Forward earnings estimates. People are starting to get full of hopium again. So it's about 140 earnings estimates on the S&P 500, which I think is ridiculous. I think we could arguably see under 100 moving forward. If that's the case, then of course things are really looking excessive. Overall, we would advise investors not to be too bearish at this point. These are the witch doctors and the other folks, the banksters and other gangsters that are talking their book and trying to sell us another hit of hopium. And I think most of us are now addicted to it. And we're going to be coming into DTs after the fact, when things really settle down and all the hopium is withdrawn and we see the full strength and the light of day and the reality of the situation we're in. All right, folks. Well, lastly, the apple of my eye. Apple could cost Google $15 billion by buying DuckDuckGo, analyst says. I think that's this is, I think, another example of more hopium. Apple could cost Google about $15 a year with little vertical integration, and that's because they could buy DuckDuckGo, the story goes on to say, and Google, they seem to indicate, makes about $25 million in ad revenue from searches on the iOS and macOS systems. And Google pays Apple north of $7 billion. Since Apple couldn't capture all that revenue if it had its own search engine, but Sacconaghi thinks it could cost Google most of it. I mean, everybody thinks that Apple should do this and that, and the next thing, Apple should have bought Netflix. And I don't think they will. I don't think it's in Apple's interest to buy a search engine. And I'm not sure that DuckDuckGo would be up for being purchased by a large conglomerate. Apple's not our friend, even though they are certainly, at least give more lip service to privacy. They're certainly not our friend. They're a company. They want our money, and that's about it. So we should start withholding money, as I've mentioned, and start saving for ourselves for a rainy day, because it's coming. The torrential downpourings are coming, my friends, and I think we need to be prepared. We are still in the perhaps eye of the storm right now, but the worst of it's going to come rolling through in the next year or so, I think. Well, that's about it. Getting long in the tooth. I keep making these videos longer than I should. I'm going to have to really start condensing what I want to talk about. So anyway, thanks for listening. I appreciate your support and help, and I'd love to hear your thoughts down below in the comments about what you're doing and how you're managing through these difficult times. And remember, Dam Spiro, Sparrow.